Hello everyone. Welcome back to our channel. Reasoning is the process of thinking logically in order to reach a conclusion based on facts, evidence, observations, or accepted principles. In simple words, reasoning is the way people analyze information and make decisions using logic instead of assumptions or emotions. In accounting theory, reasoning is used to explain why certain accounting methods, standards, or policies should be applied. For example, when accountants prepare financial statements, they must decide how to recognize revenue, measure assets, or estimate depreciation expenses. These decisions cannot be made randomly. Instead, they must be supported by logical reasoning and accounting principles. Reasoning ensures that accounting information reflects the true financial condition of a company and can be trusted by users such as investors, creditors, management, and government agencies. There are two main types of reasoning commonly used in accounting theory: deductive reasoning and inductive reasoning. #1. Deductive reasoning. Deductive reasoning starts from a general rule or principle and applies it to a specific situation. Follows the pattern: general principle, specific situation, conclusion. For example, all companies are required to prepare financial statements according to accounting standards. PTABC is a registered company. Therefore, PTABC must prepare its financial statements according to accounting standards. Another example is the matching principle. According to accounting standards, expenses should be recognized in the same period as the revenues they help generate. If a company spends money on advertising to increase sales during the current year, then the advertising expense should also be recognized in the current year's financial statements. Deductive reasoning is widely used by accountants when applying accounting standards in practical situations. Point 2. Inductive reasoning. Inductive reasoning works in the opposite direction. It begins with specific observations and develops a broader general conclusion. The pattern is specific observations, pattern, general conclusion. For example, researchers observe that many companies providing transparent financial reports receive greater investor confidence. They also notice that these companies often experience higher stock prices and stronger public trust. Based on these repeated observations, they conclude that transparent financial reporting generally improves investor confidence. Inductive reasoning is frequently used in academic research to develop new accounting theories and explain business behavior. Although the conclusion may not always be absolutely certain, it is supported by evidence collected from real-world observations. Why is reasoning important in accounting theory? Reasoning plays a very important role in accounting for several reasons. First, reasoning helps develop accounting standards. Organizations that create accounting standards must analyze economic events and determine the best accounting treatment based on logical arguments and evidence. Second. Reasoning improves decision-making. Managers use accounting information to make business decisions, while investors use financial reports to decide whether to invest in a company. Logical reasoning ensures these decisions are based on reliable information. Third. Reasoning enhances consistency. When accountants apply the same logical principles, financial reports become more comparable across different companies and industries. Fourth. Reasoning supports professional judgment. Accounting often involves estimates and assumptions, such as estimating bad debts or calculating asset depreciation. Reasoning helps accountants make fair and objective judgments. Finally, reasoning increases the credibility of financial reporting. Financial statements prepared through sound reasoning are more likely to be trusted by stakeholders and regulators. Practical example of reasoning in accounting. Let's look at a simple example. Suppose a company purchases a machine that is expected to be useful for 10 years. Instead of recording the entire purchase cost as an expense immediately, accountants apply reasoning based on the matching principle. Since the machine will generate benefits over 10 years, the cost should be allocated through depreciation over its useful life. This reasoning ensures that expenses are matched with the revenues they help generate, resulting in more accurate financial statements. Without logical reasoning, financial reports could present misleading information and lead to poor business decisions. To conclude, reasoning is the logical thinking process used to analyze information and reach conclusions based on evidence and accepted principles. In accounting theory, reasoning provides the foundation for developing standards, applying accounting methods, solving financial problems, and making professional judgments. There are two major types of reasoning. Asterisk deductive reasoning, which moves from general principles to specific conclusions. Asterisk inductive reasoning, which develops general conclusions from specific observations. By understanding the concept of reasoning, accountants can produce financial information that is accurate, transparent, consistent, and useful for decision-making. Thank you for watching this video. If you enjoyed this explanation, please like, comment, and subscribe for more educational videos about accounting theory and business studies. See you in the next video. Goodbye.